my CPF investment strategy for 2024. Rather than calling it a strategy, I think it's more of a plan, because strategy is more like you know what is the outcome, but plan is more like you can devise a plan, but results may not be what you want. So let's call it a plan, shall we? So to answer the first question, should you invest your CPF? My direct answer to this question is no, you should not invest your CPF unless you have met these requirements, which is your CPF special account is above the full retirement sum, which is currently above $200,000, because whatever that your special account is earning, 4.08% per annum for the current year, is at a risk-free rate, which means that you don't have to undertake any market risk. And to me, a 4% risk-free rate is really good enough. I don't really expect any kind of astronomical returns from a risk-free perspective. Because I know a lot of you young folks, you all desire astronomical returns from crypto, from high growth stocks, from even China markets. And I know, because I used to be like you, chasing after high returns, but just getting slapped and punched in the face when the market downturns come. So really, if your CPF is below the full retirement sum, I don't really suggest you to do that, to place your very safe CPF funds for investment. Because you think your opportunity cost is only 2.5%, but you forgot that you can transfer all those CPF OA to the special account for 4% return. So in fact, your opportunity cost is more than 4%. And if you think you can take your CPF funds outside of CPF to invest and get better return than 4%, then go ahead. Or otherwise, you can look at lower risk alternatives like subscribing to T-bills using your CPF OA funds. That's a great upgrade from 2.5% to above 3%. But if you want to transfer your CPF OA funds to the special account SA funds to get above 4%, then do know that it is irreversible, and these funds you can only see it above 55 when you have reached the FRS, and it's a long-term thing. So if you want to have better discussions surrounding personal finance and CPF, then why not join us at over 13,000 members interested in this arena of personal finance at the Honey Money SG Telegram group. So with that, I hope that I have at least gave you a mindset of when you should start trying to invest your CPF, and that is above the full retirement sum. Which means now that I've hit the full retirement sum for close to 3 years now, I will also show you what have I invested in through my Endows portfolios, which CPF OA is eligible to buy in their unit trust, which is tracking some of these very large indices. The good news is that from now till 25th of February, if you use my referral link to sign up for Endows and invest $1,000, you can get $68 of fee credit, which can offset your cost of investing with Endows. So sign up before the offer expires. Let's start with my first investment portfolio, which is the Amundi Prime US fund. I started to invest my CPF OA through Endows in April of 2021, so that's close to 3 years now. And I started with another fund, which is Lion Global Infinity US 500 fund that is tracking the S&P 500. So I transitioned to a lower cost fund, which is Amundi Prime US, but note that this is not tracking the S&P 500. It just tracks the top companies from the United States large and mid cap index. But I would say the companies tracked are really similar to the S&P 500, and just that Amundi Prime offers a much lower expense ratio. To be exact, it is 0.05% per annum expense ratio. Add in the management fees from Endows, they call it the excess fee of 0.3% for FundSmart. That is a total expense ratio of 0.35% per annum, fairly low. And if you look at my capital invested in this portfolio itself, it is around $42,000. And the current portfolio value as of the recording date is $48,000, which is a $6,000 gain at 14% positive. How I invested in this portfolio has always been the same for the past 3 years. So I will take out CPF OA $1,000 monthly, which is an automatic deduction every month on the first calendar day from my CPF OA, and they will be put into this Endows portfolio for Amundi Prime US fund. And there's a little bit of processing time, which means that every first calendar day they deduct the $1,000. Then by the end of the second work day, the $1,000 will be invested into the Amundi Prime, because unit trusts do take a longer time to process than equities in real time. So there you have it, 14% gain over a period of 3 years. Is that fantastic? I will not say it's super fantastic, but it's decent enough to negate the opportunity cost of investing through your CPF OA. But I know some of you will laugh at 14% after a period of 3 years. So little. I can do it much better with growth stocks and other things that I invest in equities. Then I'm sure you want to hear of this very attractive sign-up offer from my sponsor. The Singapore GST just hiked 1% in 2024 and times are tougher now. But Moomoo SG is doing 1% more with idle cash because you can get 6.8% per annum with the new Moomoo Cash Plus promotion for 31 days. At a max subscription of $60,000, you will be getting a total return of $340. What's more, Moomoo SG now has the Fullerton SGD Liquidity Fund, which provides higher flexibility with same-day subscription and redemption for more opportunities. That's not all. You can get up to 4 stock bundles of the top 5 traded US stocks worth $70 each and 1 Apple stock worth $260. And if you sign up with my exclusive link, you can get 1 additional $20 cash coupon. Total rewards value of 900 Singapore dollars. Of course, holding period and buy trade applies. Please note that Moomoo Cash Plus is an investment product. It is not comparable and is different from savings deposits. Principal is not guaranteed and up to 31 days, 6.8% per annum is guaranteed only during the promotional period. Investment in capital market products involves risk and the risk of losing principal. For more details, please refer to the promotional page in the description below. So don't miss this deal and use my referral link down below or scan the QR code right here to get your Moomoo SG Universal account today. Let's go to my second portfolio of Endows, which is the Amundi Index MSCI World Fund. So this fund technically tracks the MSCI World Index, which tracks the large and developed markets of the world. And to be super clear, I was previously buying a similar portfolio under MoneyOwl before they announced the liquidation news. But I heard some good news about MoneyOwl being revived by Temasek Holdings. My portfolio is already in Endows, so I will not be making any switches to it. So for my MoneyOwl CPF portfolio, I've already sold and realized a gain of around 1.5k. That was back in September last year in 2023. And for MoneyOwl, I was previously buying a much more expensive fund, tracking the global stock index. So now with Amundi Index MSCI World Fund, I think it is a much better option, considering that the expense ratio was 0.1% per annum plus the announced fee of 0.3%. That is a total expense ratio of 0.4% per annum. And my investment capital in this portfolio is $23,000 and the current portfolio value is around 24.5k as of the recording date. So that's a good 6 to 7% positive return. And note that this is just over a span of a few months from September last year. So that's like 4 to 5 months. And for this portfolio, it's an automatic recurring investment of $1,000 every 15th calendar day, automatically deducted from my CPF OA. So it's like I was pretty lucky with this portfolio, right? Invested since 2023, went through that last bull run cycle within the last quarter of 2023 and then now having a positive return of 6%. But I can assure you that all these returns did not come easy because I started investing CPF OA since 2021 after FRS, and I went through a bull market in 2021, went through a very serious bear market in 2022, and then went through another bull market in 2023. Therefore, the overall net return is positive for now. But if you have looked through my CPF investment videos for 2022 and even 2023, you see all these thumbnails, you will scared or not. My CPF portfolios just went to hell. Then if you combine after the holding period of 3 years, my average return is like 10%. That is even less than last year's bull market of S&P 500 going over 20%. But I think okay, I can accept it. Much better than my 2023 and 2022 CPF performance, where you see the thumbnail is like so depressing. For the year of 2024, it is really unknown. I know that January has been quite a good start. We hit all-time high in the S&P 500, but we are really unsure of what's to come in the remaining months of 2024. So fingers crossed, we cannot control the market. We can only control how we react to the market. And the way I react is that I will not react because I will just continue depositing $1,000 into each portfolio, which is $2,000 combined in total. And to add on, these are not just my $2,000 investments because this is just for CPF OA investing. In fact, for my cash investments, I'm also doing a dollar cost average of $2,000 monthly using cash in Interactive Brokers. And that means at a combined investment level of $4,000 per month. And I do it in an automated way, so I don't have to care about how the market, because my emotions will get triggered and then I may not want to press the invest button. So that's how I do dollar cost average. May not be applicable to you, but it's more preferable for me. So don't treat it as financial advice because my personal finance situation may be much different from you. And $4,000 is a subjective amount. You may have it lesser, you may have it more. Don't compare. If I just want to conclude this video, it will be that not everyone is suitable to invest their CPF because they may not be in a good financial situation, or if their CPF is not enough to even pay their housing, or they have not reached the full retirement, so don't copy. But if you really want to learn how you can invest using dollar cost average with your cash investments outside of Endows, then I can put you to this video right here where you can learn how I do it.